Thank you. I'm not Jeff Townsend, as you can see. I'm Namali McKay, and I'm the Managing Director of the Critical Minerals Association of Australia, and we do fall in under Jeff Townsend's Critical Minerals International Alliance as one of the country member associations alongside the US, Canada and the UK. So delighted to be here, and Jeff is in the front row taking videos if you want to speak to him afterwards, but he cannot respond because he's lost his voice. But delighted to have these distinguished panelists here with us today, and I might just kick off with just starting with, you know, the question that we all have been pondering, and that's very much about how do we define critical minerals in the context of what it means for the energy transition? It's something that the Australian government is taking on as part of its critical minerals strategy. It's not just reclassifying the list of critical minerals, but it's also looking at should it be redefined? Because if you look at other countries, there are different definitions of how critical minerals are defined. So I might just throw that open to our panelists. Would someone like to take that on in particular? You know, Wyloo, Luca, you might have an opinion about that, given that, you know, with your project. So, yeah.
Yep. Thanks for picking on me first. That was great. Yeah, I think critical minerals and how to define it, you know, some countries define it by what's critical to them. Other countries define it as what's critical to the globe and should they be producing it. So I think there's a lot of debate around, you know, which metals should be included or excluded. I think from our perspective, I try not to get too caught up in geopolitical reasons for doing things. I guess for our organisation, we think about it more as we're about to embark on this, what we view as the next industrial revolution, if you want to call it that, the next revolution. You know, it first was the steam engine allowed us to become more productive, then the invention of the combustion engine with oil, and the oil market developed and became what's today a multi-trillion-dollar market. I think we're at the beginning stages of that journey in energy metals. So when we think about critical minerals, it's about playing into that revolution, that change, that shift that's happening in the world, and what metals do we need to actually support that. So that's, you know, be it decarbonisation, be it electrification, whatever you want to call it, what are the actual ingredients that you need to make that revolution happen? And that's the way we think about it.
Great, because obviously, for example, you know, some countries are defining critical minerals as not just about the supply and demand difference there and the deficit to meet, and then whether you have reserves in country, but also some of the sovereign risk and the bottlenecks that are in the supply chain. But Georgina, I wonder if you have a view, just because I know that New South Wales government is actually has got a critical minerals strategy out for review as well at the moment, and you know, part of that you know, is looking at how you define a critical mineral at its fundamental level.
Yeah, that's right. The New South Wales government is looking to refresh our critical minerals strategy, and we had a session yesterday hearing from a cross-section of the industry about what the opportunities are for New South Wales. And the Australian government is looking at the critical minerals list for Australia at the moment. And I think the way, I guess I'd echo what Luca said, it's really about what we need for the future. In New South Wales, we're quite keen on copper being added to the Australian list for critical minerals because of its crucial role in supporting a net zero future, and because New South Wales has a bit of copper, so there's a little bit of advantage for us in seeing that on the list. And you know, the US and the EU have recently added copper as well. So I think it's important not to get too caught up on the list, but what's really important is that there are a range of minerals that are going to be vital for the future, and making sure that we understand what they are, the supply, demand, and really how we can, you know, work together, and the role that government can play in supporting that.
Excellent. Rowena, do you have anything to add to that?
Oh, I think that piece around being vulnerable to the disruption of the supply chain, I think is it remains an important component of it. And you know, the reality is there's a long list of metals that, if you're asking what's critical to the modern technologies and the, you know, economies going forward, it would be a very long list. But some of those have already got very strongly established supply chains. And I think if we're talking about government policy being focused on supporting the critical minerals growth in Australia, then I do think that it's important that we're disciplined about choosing the ones that are most in need of that government support, rather than, you know, all of the minerals that are going to participate in the growth.
Well, that actually sort of leads on to the next question that we were contemplating, and that's very much about, well, what exactly is hampering growth in this sector? Because obviously we're highly endowed with, you know, a rich array of critical minerals in Australia, and yet we cannot quite get there in time or at the pace and scale that we need. So, you know, what are we dealing with? Brett, I'm looking at you for obvious reasons, but yeah, you might have a strong view on that.
No, for sure. I think we've been investing in these sort of niche commodities for a couple of decades now, and the reality is mines don't come online, downstream processing doesn't get built in a matter of years. I think COVID exposed a number of challenges in our supply chains, and it's going to take us a long time to unwind those issues. So, you know, I think a conventional copper mine takes nearly 20 years from first discovery through to full production, and the reality is these critical minerals are more challenging. They're more technically challenging, they're harder to finance because the pricing is opaque, and there's a qualification period for some of these products that can take many years. We have a portfolio company in the tantalum space, and the qualification period for some of those products is 7 years. So once you're in, there's a great sort of barrier to entry, but to break into a business or break into a supply chain can be quite complicated and timely. So I'm not surprised. People are frustrated that things aren't happening quick enough, but I think the reality is this will take us some serious planning and time to work through these challenges.
And you know, something that came up in a discussion yesterday in terms of some of those obstacles was about the supporting infrastructure that exists around getting these projects up, and also for investors. You know, is it adequate, and can government play a different role in that regard to enable investment to come in? You know, would anyone like to comment on that? Yeah, go ahead, Michael.
I'll have a go at that. I'm not so sure the supporting, just taking Australia to start with, I'm not sure that it's so much the supporting infrastructure at the moment. I think it comes back to the project delivery cycle starting way back before you actually find the mineral. So exploration takes a long time, and access to ground for exploration at the moment is even quite a major roadblock in Australia, is just negotiating with all of the stakeholders involved in getting access to getting a drill rig onto a site. So once you've been through that, and that's, you know, the traditional landowners, that's other community stakeholders involved. Once you get through that stage, then actually finding the mineral, working up to a resource, and then going through the permitting stage. So the physical infrastructure, I'm not so sure about, but the government infrastructure involved in shortening the permitting time frame would be something I think would be very valuable to look at, because you know, there's a large amount of activity going on in the space, and doing anything requires a significant number of permits, and the people involved and the organisations involved in assessing those permits and doing that in observation at the moment in Australia is stretched, and maybe that's where something, you know, government could look at and do. And then I also echo the points in terms of, as you move down the supply chain, working out which part of the supply chain, whether you're a company or a government or a country, which part of the supply chain makes logical sense to participate in. And if that's a part that hasn't had a lot of activity, so for example, downstream processing of lithium in Australia, there hasn't been very much of it, and what we're finding is there's not a lot of inbuilt expertise in the country around chemical processing, because we've got very good mineral processing, but chemical is a slightly different aspect. And so the skills needed and the skills base is also another roadblock, and that's something that government can also assist with in terms of immigration policy and skilled migration, etc.
Rowena.
Look, I agree with all of what was said. I guess, you know, we're leading the development of the Dubbo project here in New South Wales, and we're at a point sort of 15 years in where we have navigated a lot of those hurdles. We've got through the exploration, we've got through the approvals process, we've done all the work of developing the flow sheet, and we're at the point where, you know, we're really talking to off-takers and funding. And I think that's the point where infrastructure actually becomes really important, because, you know, when we're talking to off-takers, we're talking to the big OEMs globally, and they have got very ambitious carbon net zero targets, and one of the first hurdles is, can we commit that we will be carbon net zero by, you know, most of them want it by 2039. So, you know, I think access to low-cost renewable power is actually critical for these projects. So, yeah, I think depending on where the project is in its maturity, I think will depend on what kind of government support it most needs.
Yeah, exactly, because the cost of energy is for a lot of investors, they say, is almost prohibitive in terms of investment, and also for juniors. So would anyone else like to weigh in on what exactly is hampering our growth in getting to scale and pace fast in this sector? Khalid, do you have any comments on that?
I think beside, or let's go back to the definition itself. I think the changes in the definition from the beginning, and then keep evolving and then adding new minerals, is keeping even the mining sector not willing to catch up with these changes. It's not only now mining or only metals and minerals. Last July, U.S. Energy Department changed the definition of the critical mineral, especially in particular for the energy, which become more engineered minerals, such as the steel and then carbon dioxide and then so many other things. So it is not only really mining, it is mining and then full ecosystem to develop and then produce these minerals. In addition to this, what my colleagues mentioned, the evolution of the ESG and the requirement, the exploration, the investment, the changes in the climate, all these adding more pressure and adding really requirement to go to the midstream, downstream, not only to the upstream and mining sector. That's maybe one of the reasons, and as well as the safety and security required for the mining, which also we see now changes in the mining regulation in terms of safety. So that's adding more pressure, not only for the critical minerals, even in all mining related. So that it's become more pressure to the sector to provide responsible mining, to add to the mining sector.
Well, on that actually, so I mean ESG, we discussed this at length on ESG. Are we actually going to see these price premiums coming from OEMs and passed down the line for ESG? Will there be a sort of a dual pricing structure for some of these commodities, which are ESG compliant slash friendly versus those that are not? And you know, what does that mean for us in Australia trying to create some kind of alternative supply, alternative resource base alternative to the current model? Would anyone like to take that on?
Mike, I'll jump in after you.
I'll have a go. Firstly, I think in Australia, I think we like to think of ourselves as having a natural ESG advantage because of the government regimes that are in place, the sense that you have as an investor, for example, that there are regulatory bodies and rules and regulations, whether it's safety, whether it's environment, whether it's biodiversity and coming in, whether it's a carbon footprint. But there's a fairly strong mining environment that you can have a kind of your label sort of produced in Australia gives you some advantage. The big question in all of our minds is whether that advantage, and then going further to where your inputs are all carbon neutral and your biodiversity offsets are very, very clearly laid out, etc., whether that will yield you higher price. And that's not clear at the moment. In the experience that I've had, there's discussions with OEMs where in particular the European OEMs can see it coming faster than other parts of the world, but actually paying a higher price for the same commodity that has a lower carbon footprint and a better ESG footprint, I don't think has happened yet. I think it will come. To what extent, whether that will compensate you for the extra input that is required or not, is a question mark. But in Australia, that's an academic question anyway, because I think we like to think we all produce to a level which is, international standard.
Well, I mean, I guess the next step in that question is, the supply chain in its entirety goes through a number of countries, and so, before it gets to the OEM. So how do we actually create that alternative pathway? Because there is the option to go to the midstream that's less ESG friendly and the alternatives don't necessarily exist yet in the midstream and further downstream. But Brett, did you want to?
Yeah, I was just going to add to that. I agree. Australia is an attractive environment. Sort of mining companies' customers trust this location, and it's a great place to put your money. But this debate's all about, can you change customers' minds around paying more for an ESG-friendly product? And I think we've underwritten 2 investments in the past on the basis that we were trying to diversify away from a concentrated supply chain. And when push came to shove, we built those projects and went to the end customers and said, okay, guys, times are tough, it's time to pay up. They were more focused on their operational controls of their own issues, and they failed to meet those expectations. So I think we're very sceptical that this will play out in the long term, that you end up with 2 different pricing schemes. So unless you can change the behaviour of customers, and whether that's a carbon tax or some other sort of government intervention, the OEMs will build the supply chains they need to meet their own customers' expectations, and some will be winners and there will be some losers in that process.
Yeah, I think this is my favourite topic because as a nickel producer, we've been talking about the market bifurcating for a long time and it's never happened. And I think it's to your point where, as mining companies, where we're not able to do that is we produce an intermediate product. We don't produce a finished product. So we produce a concentrate that ends up somewhere in the world and then makes its way into a car. And then you're asking a customer or an OEM to somehow pay more for your product and pass that cost on to consumers and hope that consumers would be willing to pay for it. So I think that's very difficult to do in the current ecosystem because you produce this intermediate product, it ends up with a metal trader, and then it ends up getting processed somewhere and it gets all muddied and you can't follow it. And people have been talking about, is there a way to prove provenance of metals? Can we use blockchain and all these fancy technologies? It's just very difficult to do, and I think the current setup and the incumbent players within that space are not incentivized to do it. As a metal trader, for example, is it beneficial to be able to muddy the waters? Yes, it is, because you can mix products and get products from different locations. So do you see that changing? No, but I think there are ways of achieving it indirectly, and one of them, the big one, has obviously been the IRA. So you're either compliant or you're not compliant, and that naturally creates a division in pricing, and you naturally get a bit of that pricing passed on to you. The other way to do it is for countries like Australia to try and go downstream and actually produce a finished product that you can then sell to an OEM who can then tell their customers that they're using a very clean form of nickel. And I guess that's where, we need government to play a big role in, balancing the scales between the cost of going downstream in Australia versus the cost of going downstream somewhere else. And I often reflect on this and go, it's a difficult one to to ask the government to support you to build this infrastructure. But in many ways, there are clever ways of doing it. There are production tax credits. There's lots of different incentives that you can use. And I often think about it and go, a little bit of something is better than a lot of nothing. And we've fallen into the trap of a lot of nothing is fine. And we've been almost asleep at the wheel and selling our concentrate and our ore abroad and never actually developing our own system. So I think, from our perspective, that's the two ways I could see it playing out is it's either a government forced thing, such as the IRA, or you build your own downstream infrastructure and you produce a finished product. And then the third way that I could see government playing a role is, do you improve the labeling standards on products? So for example, when you go buy a Tesla, should you know where that nickel's actually coming from? Should governments mandate that customers know where that's coming from and what the carbon footprint is of that actual product? So those are three ways that I think it could happen. But will it happen on its own? I think we're similar to Brett. We're pretty skeptical.
I would just add one thing to that, and that is that the comment Brett made before about pricing is very opaque. And if I speak to rare earths in particular, as we're negotiating on offtake, the only indice that we've got to be able to reference is the Asian Metals Index, which is, exclusively reflected on product costs from China. And yes, they've got some OPEX advantages, but they also have got a government subsidy that helps them, and they've got control of what they're actually sharing in terms of information. And but until we've got an alternative supply chain, we won't have the volume of information to be able to establish, what actually are the prices outside of, that particular indice. So it's been interesting talking with OEMs, because I think there's a great maturity in understanding that we need to protect the projects from the price going too low, and there's quite a lot of discussion about putting floors into pricing mechanisms. It may well be that it's still connected to the Asian Metals Index without any premium in the in the mid-range, but protecting from the downside, I think, is another way of helping these projects.
Yeah, I think it has to be balanced between both. We are requesting, or we are looking to the expansion of the required materials for the energy, and on the other hand, we are trying to also put some more regulation and then requirement to produce or to go to the midstream and downstream. I think to grow the sector is required really balancing the requirement in both in the mining sector as well as the requirement. Otherwise, we can say, for example, we can put some LMEs similar to the gold, and then we say that we can track these minerals and then from where they came, and then what are the ESG requirements for these minerals. But is it the right time? How are we going to put it? I think that's required a lot of work from both the mining sector as well as the regulator to set up these requirements and to balance the deficit of the requirement for the future. The supply and the deficit is huge. And then just, for example, the copper requirement, as I remember from last year number, what's required from the copper from 20 to 2050 is almost equivalent to all the copper that's been produced in the world from the initial mankind to now. So within 20 to 30 years, we will produce copper similar to what has been produced in the past. I think we need to be really very careful setting up the policies and procedure required for the minerals.
If I can just jump in here, I think this is a clear role for government, and Australia has a natural advantage. We'd heard about the planning permits, and we're doing pretty well there. I know that in New South Wales, we're often criticised for the length of time it takes to get a mining project up and running, but we know that the approvals framework meets 97% of the performance expectations of ICMM's requirements. So I think we're pretty good there. There's always streamlining that can be done, but really the challenge is in the midstream and the downstream, and how we look to discover what the best effort for government is there to be able to make the difference. It really is a competitive advantage Australia has over other jurisdictions, and there is clearly a role for government to play there to make the most of that opportunity. But it's where you focus that effort. And I think the circular economy argument around and how that feeds into ESG is also really important. And being able to talk about the recycling and how we're reusing some materials, as well as the production and what we can do onshore, is going to be part of that discussion.
So that's actually raised an interesting point, Georgina, in that you know, government does have a role to play, and you can see governments around the world stepping in to take various actions. So, I mean, is it a case that we governments are taking on protectionist policies, or are they taking on strategic intervention, or really just taking opportunities? Like there's a lot going on out there internationally from governments and different governments. Yeah, I mean, what do you think?
Look, I think overall governments are really working very well together. There are a lot of agreements internationally, you know, support with the EU, with the United States. I think that but I also think that there is naturally a little bit of competition between jurisdictions. I mean, Australia, competitive federalism is still alive and well, but I think more and more we are seeing a commitment to be working together across jurisdictions and focusing on our natural advantages. You know, in New South Wales we have 17 of the 26 critical minerals. We've got areas that we know we have advantages within those, and that makes sense for us to focus on. And looking at a pipeline of projects for New South Wales, which really starts very early with exploration. Other jurisdictions have other advantages, and working with global institutions and with other countries, I think we're seeing more and more. So there's always going to be a little bit, but particularly in the last 12 months, I think, I've seen a real shift in the way governments are focusing this and wanting to work together.
Michael, yeah.
But picking up on your question of protectionism, I think that by definition, when you put in policies mandating that certain places are okay for minerals to come from, certain places aren't, it is a form of protectionism, and it will result in higher prices by definition. And if we think about it as an investor in the mining business and been involved in all of my career, you never had to think about geopolitics. You always had to think about politics in the sense of what the country where you were investing, what the government policies were in relation to the mineral industry in that country. But now, in terms of thinking about where you deploy capital, you can no longer have the biggest factor being where am I going to get the best return on that capital, where is it most logical from a financial point of view to process minerals that obviously you can't determine the minerals in the ground, but you can determine what you do with them once you get out of the ground. And in that chain, where today we have to pay very close attention to the geopolitical aspects of where it is, rather than saying where's the best place in the world to build a downstream processing plant from a cost, logistics, infrastructure, and operating and capital cost point of view. You can't do that anymore. You have to say, where do I have to build this plant in order to satisfy the requirements of whether it's the IRA or the European Strategic Minerals Act. And the end result of that, like all protectionism, will result in differential pricing for the end consumer.
And I guess the question is, how has that situation emerged? And is there a counter-argument that situation emerged from protectionism in the first place, where there's, some countries have subsidised, government subsidies backing these sectors, and then others have, the whole, I think, was it you, Luca, that touched on COVID, really showed us where we were vulnerable in that supply chain. And so where there is a monopolised, subsidised midstream market, it's potentially a form of protectionism, and then therefore we have the US coming in with a potentially protectionist subsidy program. And now we, Australia, in the middle there, are really assessing how do we, A, compete, and B, as a government, how can we support the industry to go much faster using some of those, whether it's fiscal tools or, other tools to step in. Brett, I can see you're jumping there in the corner.
So I think government reaction is or this government reaction is really just it's all driven by a strategic failure. And I think where you look at the Chinese concentration of particularly critical minerals, it was probably born in around 2002, 2003. We were happy to take the royalties, we were happy to feed them the minerals, but I don't think the government at the time or the corporates gave much thought to what it would look like in 20 years' time. So we can talk about protectionism, it might help in the short term, but if we want to compete, we have to compete at a lower price. And so the strategy that we have to develop today has to be about repositioning our cost structure and bringing some of that processing back home. And that's a real challenge because there's an embedded advantage there sitting out in countries outside of Australia. So to compete with that is going to take time, and it's going to take some serious government and intergovernment cooperation.
Yeah, I agree with that. I think we're seeing the result of the market failing, and you're going to need government intervention to correct for that. But what it should be is establishing then a new market dynamic that then can sustain itself beyond that. So there's this sort of transition period that we're talking about. And, you know, I was in Washington last week with the Critical Minerals Trade Delegation and Roundtable, and there was so much conversation there about, you know, what is the government policies that is needed in order to facilitate this transition and establish, you know, just more sensible market dynamics where you've got more than one supply chain available for end users. And I guess I was really encouraged by the level of urgency and alignment and intent that was evident there. So I think, you know, where you can see government to government really working together across the jurisdiction boundaries, that's when you start to feel encouraged, because I think if each country tries to do this solo, it will fail. We've got to rapidly establish an end-to-end supply chain. We're establishing another industry effectively, and we have to do that across jurisdictions so that we take advantage of various different jurisdictional strengths.
If I can just pick your brains a bit more, Rowena, while you were in the US, did you get a sense of how accessible some of the IRA funding would be? Because, you know, that's been pinned for a lot of juniors and Australian explorers as an option in terms of, you know, that supply chain. But it's, you know, how easy is it going to be to access that? And did you get a sense of that?
Well, first of all, you get dizzy with just the number of different options there are. So IRA is one of them. They've all got really natty acronyms. There's the 45X and there's the 30D and there's the, you know, Title III. And so once you get past trying to work through all the code of it, you know, I guess what I saw was a real desire from the US departments, be it the Department of Energy or the Department of Defence or the Department of Commerce, to come toward Australian businesses and really help us to understand how to navigate and access those funds. And I think that's in evidence even this week, because most of the people I spoke to in Washington are here in Sydney this week, you know, participating in IMARC and, you know, very deliberately expending energy to facilitate Australian businesses understanding how to access it. Having said that, the IRA is very specifically focused on battery minerals. You know, I'm developing materials for permanent magnets. They're still critical for EVs. They're essential for wind turbines, but they're not part of the battery. So, you know, there's a lot of specificity in these pieces of legislation that make it difficult. And there's also a very strong made in America or made in the US component to it. So it's not necessarily going to directly assist investment in Australia, and I don't think we should rest on that being the solution. We have to work out how we are going to incentivise our own equity markets to support the projects here in Australia.
Khalid, can I ask you for an international perspective on you know, what the international supply chain looks like now and our efforts to sort of find alternatives?
Yeah, sure. let's take an example. For example, the copper, the requirement for the copper for the supply is for example, for the EV cars, it's almost 3 times higher than the conventional cars. Magnesium is almost 2 times or 3 times. Some minerals, they were not in the conventional car, that they are required, and they are part of the required critical minerals. I think that the supply within the coming 20 to 50 years, as per the International Agency of Energy, is almost going to grow to more than 3.5 to 4 times. In general, in some minerals, their requirements are going to go more than 50 times more than the existing supply. So it's really huge, and it's quite a lot of efforts. I'm just referring to my colleagues, and I think it's a full cooperation between the governments, mining, countries, regulation, transparency, and in all the chain in order to meet the requirement to more green energy, more decarbonization, greenhouses, all that sort of things.
Great, thank you. And I'm just getting little signs from the corner, so I just wonder if I can get each of the panelists to just give me a 30-second or 15-second grab just to finish off on you know, what your takeaway from this is. Brett, I've just put you on the spot.
Put me on the spot, make me go first.
Yeah.
Look, I think it's all about discipline. We need to build this in a hurry, but we just can't throw money at everything. As I said yesterday on a panel, the only organisation in the world that will fund a non-economic project is a government. And they'll have their own reasons, but that's not necessarily the best use of taxpayers' money.
Michael.
Just an incredibly interesting, stimulating and exciting time to be in the critical mineral space, whichever part of it you're in, because it's so complicated, it has so much potential, and it's so essential if we're going to actually reduce carbon, which is coming back to the primary aim.
Georgina.
I would pick up on collaboration. So we talked about collaboration between governments, but I think also collaboration with governments and industry is going to be crucial to get this right, and also collaboration industry to industry.
Brilliant.
Yeah, I think this is the golden age for critical minerals, and I think there's an opportunity that requires us to act. And, you know, I think if we leave it for 5 years and think that we're going to be able to establish ourselves then, I think we will have missed that opportunity. We've got this opportunity now. Our strength is in the up and midstream, and we must play to that strength and play fast.
Yeah, I think echoing what everyone else has said, but for me, it's about also not losing sight of how big an opportunity it is and what a big shift the world's actually going through. It really is a big revolution that we're going through. And, you know, you spoke about some of the numbers in terms of how much metal and the commodities that are actually required to achieve that. It's a huge opportunity. Let's not sit on our laurels. Let's actually take advantage of it. We have a natural advantage with our geology. Let's not just rely on that. Let's actually take full advantage of what's ahead of us.
Khalid.
Yeah, I will take actually all above, so all what has been said, but I would also focus on the collaboration. But I will take it in a broader brace. Really, it's not only within the country. I think I would look to the whole globe and all countries, to collaboration between the governments, mining companies, to accelerate and speed up the exploration technologies, R&D, to provide the required metal for the world.
Well, you just stole my line, Khalid. So I was exactly. So just, you know, really to finish off, it's very much about collaboration, I think, and international collaboration. And I do believe there's a group of government officials meeting in the margins here, just having that very conversation between like-minded countries about how we do find these alternative supply pathways quickly, efficiently, and you know, share some of that midstream. But thank you all very, very much indeed for an excellent, stimulating, engaging panel. Thank you. Thanks all.